Welcome to my YouTube channel. I am Dr. D.D. Kulkarni, working as Assistant Professor of Commerce, Sri L.K. Koth College of Commerce, Sankeshwar, District, Belagavi. In this video, we will solve a case study on consignment accounts in the Financial Accounting Subject 2 of Rani Chennamma University, Belagavi. I have taken a case study which has appeared for the year 2017. The case study is like this. Mr. Anand of Mysore sent goods to Sunil of Pune valued at rupees 1 lakh. Anand incurred rupees 10,000 for freight and insurance for sending them. Sunil paid an advance of rupees 50,000 to Anand. Mr. Anand received an account sales from Sunil which showed that the entire goods were sold for rupees 2 lakhs, out of which credit sales were rupees 20,000. Sunil collected only rupees 18,000 from the debtors and informed that rupees 2,000 are totally irrecoverable and treated as bad debts. Sunil paid rupees 2,000 for clearing charges and rupees 8,000 for advertisement. He was entitled to an ordinary commission at 5% on sales. Prepare consignment accounts in the books of consignor, assuming that case 1 del credit commission was not given to Sunil. Case 2 2% del credit commission on total sales was given to. Now let us discuss this case study. It's a very simple case study. Mr. Anand of Mysore is consignor who has sent goods to Sunil of Pune. So Mr. Sunil is consignee. So he has sent goods valued rupees 1 lakh and incurred rupees 10,000 for freight and insurance for sending them. So the freight and insurance amounting to rupees 10,000 is the non-recurring expenses of the consignor. Sunil paid an advance of rupees 50,000 to Anand. Mr. Anand received an account sales from Sunil, which provides the details of the sales, showed the entire goods were sold. So that means here there is no any closing stock for rupees 2 lakhs, out of which credit sales were rupees 20,000. Sunil collected 18,000 from the debtors and informed the consignor that rupees 2,000 are totally irrecoverable and treated as bad debts. Sunil paid rupees 2,000 for clearing charges and rupees 8,000 for advertisement. These are the recurring expenses of the consignee. He was entitled to an ordinary commission of 5% on sales. So we are asked to prepare only consignment account in the books of consignor, assuming that the del credit commission was not given to Sunil. In the case 2, there 2% del credit commission on total sales was given to Sunil. So in this case study is about how to prepare the consignment account when the del credit commission is given and is not given. So dear students, one thing you should understand here, usually the consignor allows del credit commission only when the consignee undertakes the risk of a collection of the debts. So here the when del credit commission is not allowed, then whatever is the amount of the bad debts that will be debited to consignment account. When the del credit commission is allowed to the consignee, in such case, as a consignee assumes the risk of collection of the debts here and he was allowed with the del credit commission, so bad debt amount will not be debited to consignment account. So now let us go for case 1. So there is no any working note required in this case study because all the goods are sold here. There is no any normal loss, there is no any abnormal loss. So that's why I said at the beginning the case study is very simple. So the case 1 here is del credit commission. Del credit commission is not given. So in the books of or consignment account you can also write. So in the books of, so consignor is Mr. Anand here. So in the books of Mr. Anand, in the bracket you write consignor. So now here consignment to Pune. So consignment to Pune account. Consignment to Pune account. This is of course a very simple problem. So as it is in the nature of trading and trading accounts, so let us write down all these things here. So when the goods are sent by the consignor to the consignee worth rupees 1 lakhs here, then the entry will be consignment account debit to goods sent on consignment. So goods sent on consignment. That is rupees 1 lakh here. Then Mr. Anand incurred rupees 10,000 for freight and insurance. So these are non-recurring expense of the consignor. So when the consignor has paid the expenses, then entry will be consignment to Pune account debit to bank account. Bank account. So here you write expenses here. That is rupees 10,000. So in the first case, as the delivery commission is not given here, so in such case the consignor does not assume the risk of collection of the debts. So if there are in case of any bad debts, so that should be borne by whom here? That should be borne by the consignor himself. So the amount of bad debts will be debited here. So when there is bad debts here, consignment account debit to bad debts here. So 20,000 were credit sales here, out of which he collected only rupees 18,000. So 20,000 minus 18,000. So 2,000 is the amount of bad debts. So when the consignee has paid expenses, then the entry will be consignment account debit to consignee's account. So that is Sunil's account here. Sunil's account, in the bracket you write expenses here. So he has paid 2,000 plus 8,000, total 10,000 has been paid by consignee here, right? Then when the commission is payable, then the entry will be consignment to Pune account debit to consignee's account. So that is Sunil's account. So here Sunil has been paid a commission at the rate of 5% on sales. So 5% of rupees. So the cross sales that is given the problem is that rupees of 2 lakhs here. So it will be 10,000. Right? Then when the sales are made by the consignee, then the entry will be consignee, that is Sunil's account debit to consignment. So consignment is credited by Sunil's account. So that is rupees 2 lakhs. So there is no closing stock as it is given the problem that the entire goods were sold. So now let's take the total here. This is 2 lakhs here. So 2 lakhs. So now let us find out the difference here. 0 here. So 2 plus 8, 10, 10, 1. 1, 2, 3, 3, 4 plus 6, 10. So this is transferred to general P&L account. So in the bracket you write transfer, profit transferred. So this is the consignment profit. So profit transferred. So this, remember here, in this case here, delivery commission is not given to consignee here. So that means the consignor does not assume the risk of collection of the debts. Clear? So now let us go for case 2 here. The same thing we should write down. There is not much difference here. Only thing, we should not debit to the amount of bad debts here, but commission should be calculated here. So I will write here case 2, calculated commission is given. So the same thing will continue in the books of Mr. Anand, consigner, so consignment account. So here, when the goods are sent, then the entry will be consignment account to goods sent on consignment. So goods sent on consignment here. So that is, in the problem we have given the goods sent worth of rupees 1 lakh. So worth of rupees 1 lakh here. Then when the expenses are paid by consignor, then enter will be consignment account to bank account. So in the bracket you write expenses. So consignor has paid rupees 10,000, right? Then when the expenses are paid by the consignee, then the entry will be consignment account to Sunil's account here. So in the bracket you write expenses. So he has paid 2,000 plus 8,000, similarly what we have wrote in the previous here. So 10,000. Then when the commission is payable to consignee here, then entry will be consignment account to Sunil's account. So Sunil's account here, it is a commission. So now the commission is of two types. So one is ordinary commission. So I will write ORD. Okay. So that is 5% off. So 2 lakhs. Right. So that comes to 10,000 here. Right, then 10,000. Then del creditor commission, that is 2% off. I think yes, it is 2%. So 2% off rupees 2 lakhs. That comes to 4,000. So total commission here will be 14,000. Right. So we have recorded goods into consignment, we have recorded the expenses paid by the consignor, we have recorded the expenses paid by the consignee, and we have recorded the commission payable. So now we need to record the sales made by the consignee here. So then the entry will be Sunil's account debit to consignment account. So consignment account is credited by Sunil's account. So 2 lakhs. So now you please take the sum of this here. So 2 lakhs. So the difference here, it will be now 4 plus 6, 10, 1, 1, 2, 3, 3, 4, 4 plus 6. So 66,000. This is transferred to general P&L account. General P&L account. So transfer of profit or profit transfer. So previously what? 68,000. Here we get 66,000. Why this is the difference? Because it is because of the amount of the bad debts. Clear? So when the del creditor commission is allowed by the consignor to the consignee, then the consignee has to assume the risk of the collection of the debts here. So I mean to say, he needs to bear the risk of bad debts. So in case if the bad debts are not collected, so in case of these bad debts, he has to bear here. So that bearing of bad debts is compensated by the del creditor commission here. Clear? So thank you.